Yeah, in fact, I would say that today we're reporting our 2023 results, and 2023 was really, I would say, in two parts. You know, the first half was extremely strong, and we delivered extremely strong results. In the second part of the year, we already observed some softening, you know, in the demand in some of our markets that we were able to compensate through pricing and also through our cost-saving measures. So this is why I think we are posting very strong results for 2023 with I would say, in organic basis, a stable EBITDA and record margins. Now, if we look at 2024, I would say that the start of 2024 looks very much like the end of 2023, and we are very much focused, you know, on our cost measures and also careful cash management and capex management. And we've assumed in our forecast that this situation would last more or less over the year. So we did not assume a recovery, I would say, in the second part of the year.
Philippe, let's just dig down into where the demand problems are coming from. Could you just illuminate us, please?
Yes, I think, first of all, I must say that we have very diverse end markets. You know, our biggest end market does not represent more than 20% in our portfolio. So this is why I think we display a very good resilience. And when you look at the variation of EBITDA 23-24, we're talking about a variation that is in the range of -10% to -20%, which in the current macroeconomic context is quite, I would say, satisfactory and allows us, you know, to deliver what we promised to the market, which is essential capex and payment of dividends. But I would say that globally, what is making, to go to your question, the demand a bit softer today in some segments, and in particular in the construction, and you know that we have some essential products that go into the manufacturing of glasses and so on, is probably the interest rate and the inflation. So of course we can hope that the situation will get better, but again, we did not put that in our forecast, and obviously we are ready whenever the demand picks up.
Let me just get into the lack of visibility around the second half, though. Does that concern you at this stage that you can't see down the line for the second half?
Not really. I mean, you know, we cannot control the demand on the market. So we are prepared whatever happens. And this is what is translated, you know, into our forecast today. What we will focus on is really on our cost-saving program, which is already delivering some results. You know that we announced during our Capital Day in November last year, a cost-saving program of 300 million euros. That is also possible thanks to the separation that took place in December last year. And we will also very much focus on the management of our cash and our capex, meaning that we will focus on essential investments in the first part of the year. And if ever at some point the situation improves, we will be able again to invest in our growth projects.
You mentioned